Buying your dream home is one of the biggest milestones in life. But for most people, paying the full price upfront isn't possible. That's where a home loan can help. However, many first-time buyers make expensive mistakes because they don't understand how home loans actually work. Some choose the wrong lender. Some apply without checking eligibility. Others don't know which documents are required, causing unnecessary delays or even rejection. So, before you sign any loan agreement, watch this video till the end. Today, you will learn what a home loan is, how the home loan process works, who is eligible, which documents you'll need, common mistakes to avoid, and smart tips that could save you thousands over the life of your loan. Let's get started. What is a home loan? A home loan, also called a housing loan, is money borrowed from a bank or financial institution to buy, build, renovate, or extend a residential property. Instead of paying the entire cost at once, you repay the loan over several years through monthly EMIs, equated monthly installments. These EMIs include a principal amount interest charged by the lender. Depending on your loan tenure, you may repay the loan over 10, 15, 20, or even 30 years. Simple example. Imagine you're buying a house worth Rs 60 lakh. You pay Rs 12 lakh as your own contribution or down payment. The bank finances the remaining Rs 48 lakh through a home loan. Instead of arranging Rs 48 lakh immediately, you repay it every month through EMIs over the chosen loan period. That's how a home loan makes home ownership more affordable. Why do people choose home loans? A home loan offers several advantages. It makes home ownership possible. Instead of waiting years to save enough money, you can buy your house today. Affordable monthly payments? Rather than making one huge payment, you pay smaller monthly installments. A longer repayment period. Many lenders offer repayment terms of up to 30 years, reducing monthly financial pressure. Tax benefits? Depending on your country's tax laws, borrowers may qualify for deductions on principal repayment and interest payments. Property ownership. Even while repaying the loan, you gradually build ownership in the property. Types of home loans. Not all home loans are the same. Let's look at the most common types. 1. Home purchase loan. This is the most common loan. It is used to buy a new or resale residential property. 2. Home construction loan. If you already own land and want to build a house, this loan helps finance construction costs. 3. Home improvement loan. Used for repairs, painting, waterproofing, flooring, electrical upgrades, or remodeling. 4. Home extension loan ideal. If you're adding another room, floor, balcony, or expanding your existing home. 5. Balance transfer loan. If another lender offers lower interest rates, you can transfer your existing home loan to reduce your EMI or save interest. Who can apply for a home loan? Every lender has its own eligibility rules. However, most consider the following factors. Age typically between 21 and 65 years. The loan should usually be repaid before the maximum eligible age set by the lender. Income. Your income should be stable enough to comfortably repay the monthly EMI. Higher income generally improves loan eligibility. Employment lenders usually accept. Salaried employees, self-employed, professionals, business owners, freelancers with stable income records. Credit score. A strong credit score increases your chances of approval and may help you secure better interest rates. Late payments or loan defaults can reduce your eligibility. Employment stability. Banks prefer applicants who have maintained stable employment or business operations over time. Frequent job changes may require additional verification. Debt-to-income ratio. If you're already paying several loans or credit card EMIs, your home loan eligibility may be lower. Lenders want to ensure your monthly obligations remain manageable. Documents required for a home loan. Let's look at the documents usually required. Identity proof examples include passport, national ID, driving license, voter ID, Aadhaar card, India, address proof, such as utility bills, passport, Aadhaar card, rental agreement where accepted income proof for salaried applicants, salary slips, bank statements, employment certificate, income tax documents where applicable. For self-employed applicants, business financial statements, tax returns, profit and loss statement, balance sheet, bank statements, property documents. These may include buy, sale agreement, title documents, approved building plan, property tax receipts, builder documents for under construction projects, passport size, photographs, usually required, along with the application form. Step-by-step home loan process. Now let's understand how the entire process works. Step 1. Check your budget first. Calculate how much EMI you can comfortably afford every month. Experts generally recommend keeping total EMIs within a manageable portion of your monthly income, so your finances remain balanced. Step 2. Compare different lenders. Never apply to the first bank you see. Compare interest rates, processing fees, loan tenure, prepayment rules, customer service, hidden charges. Even a small difference in interest rate can save a significant amount over the loan tenure. Step 3. Check eligibility. Most lenders provide online eligibility calculators. Use them before applying. This saves time and avoids unnecessary loan rejections. Step 4. Submit your application. Fill out the application form carefully. Attach all required documents. Missing information can delay approval. Step 5. Document verification. The lender verifies identity, income, employment, credit history, property details. They may also contact your employer or conduct additional verification if needed. Step 6. Property valuation. The lender evaluates the property's market value and legal status. This helps ensure the property is suitable as loan security. Step 7. Loan approval. If everything is satisfactory, the lender issues a sanction letter containing loan amount, interest rate, tenure, terms and conditions. Read every detail carefully before accepting. Step 8. Loan disbursement. Once legal formalities are completed, the loan amount is released. Depending on the project, funds may be paid directly to the seller, to the builder in construction stages. Understanding down payment. Most lenders don't finance the entire property value. You'll usually need to contribute a percentage yourself. This is called the down payment. A larger down payment can reduce your EMI, lower interest costs, improve approval chances, fixed versus floating interest rate. When choosing a home loan, you'll usually see two options. Fixed interest rate. The interest remains the same throughout the selected period. Advantages. Predictable EMI. Easier budgeting. Disadvantages. May be slightly higher initially. You may not benefit if market rates fall. Floating interest rate. The interest changes according to market conditions. Advantages. Can reduce EMI when interest rates fall. Disadvantages. EMI or tenure may increase if rates rise. Choose the option that best matches your financial goals and risk comfort. Common reasons. Home loans get rejected. Many applications fail because of avoidable mistakes. Some common reasons include poor credit history, low income, incomplete documents, incorrect application details, existing heavy debt, property, legal issues, unstable employment. Smart tips before taking a home loan. Here are some practical tips every borrower should remember. Maintain a healthy credit score. Save for a larger down payment. Compare multiple lenders. Read every loan agreement carefully. Avoid taking unnecessary loans before applying. Build an emergency fund for unexpected expenses. Don't borrow more than you genuinely need. Understand all processing fees and additional charges. Common myths about home loans. Myth 1. The lowest interest rate always means the cheapest loan. Not necessarily. Processing fees, insurance, and hidden charges also matter. Myth 2. You need a very high salary to get a home loan? Not always. Eligibility depends on income stability, repayment capacity, and credit profile, not just salary size. Myth 3. Prepaying a loan is always a bad idea. In many cases, making extra payments can reduce total interest costs and shorten the loan tenure. depending on your lender's terms. A home loan is more than just borrowing money. It's a long-term financial commitment that can help you achieve one of life's biggest goals, owning a home. Before applying, understand the process. Check your eligibility. Prepare your documents, compare lenders carefully, and borrow only what fits your budget. Making informed decisions today can save you money, reduce stress, and make your journey to home ownership much smoother. If you found this guide helpful, don't forget to like this video, subscribe to the channel, and turn on the notification bell for more easy to understand finance guides. If you have any questions about home loans, EMIs, eligibility, or choosing the right lender, leave your question in the comments below. Thanks for watching, and we'll see you in the next video.